Welcome back to another episode of the XRP podcast. Today, I'm going to be diving into ETFs, but also why the market is starting to move in some very unusual ways. We've seen all-time highs. Ethereum is starting to move. A lot of things happening right now. We'll break some of that down today. We'll have a special guest coming over from Bitwise that'll be joining me here in just a moment. Before we get into all of that, I want to kind of head on over to what's going on with, of course, the issue with the market in general. Let me kind of just jump over to a screen share here and you guys can kind of see some of the activity out there. As you can see, fear and greed way up on the chart right now, setting at 63, which is very intriguing based on the fact that we've got retail sentiment, which has been somewhat down and continuing to go down. But at the same time, investors are very, very bullish. As you can see right there, Bitcoin on the 7 day right there with almost 6.5% up. On the 30, 10%. This is one of the best moving assets, including Ethereum. If you look at XRP, a late mover, but definitely this week starting to get some air underneath it, up almost 6% and trading at 145. So there are some things happening right now around these top tiered tokens that also correlate to ETFs. And of course, we're going to be diving into a lot of that, that we'll get into more detail on that and maybe why we're starting to see that. One other area that's going to be interesting is this right here. And that, of course, is Coinbase puts out a warning on their Quantum Advisory Council, which is now warning that proof of stake blockchains face an added exposure to quantum attacks. So lots of issues right now on proof of stake, as well as what we're seeing within the Bitcoin. So, and we've talked about it before. I think XRP and Ripple just announced they were going to be quantum efficient by 2028. That appears to be in line with what most people have been expecting coming out of Ripple. That is a good thing. I think what Ethereum has been doing with the Ethereum Foundation, they continue to push really hard on this. So we wanted to bring in an expert, not only in this area, but obviously we'll be talking about ETFs, and that's going to be Juan Leon, who is coming in from Bitwise as a senior investment strategist. Let me just bring him on to the show real quick. Hey, Juan, how are you?
Hey, Paul, I'm doing great. Thank you. How are you?
Excellent, excellent. So, a couple of things happening right now in the markets as we are recording. Ethereum is up, and I look over on my side chart, Bitcoin holding it around 78.8. With that, you of course have two things happening. One is direct token exposure, but we're seeing a lot of activity in the ETF space. Of course, Bitwise is very active in that. Why do you guys think all of a sudden we're seeing so much activity in ETFs right now?
I think some of the major concerns that we've seen this year, it's still early to tell, but maybe they are starting to dissipate. As we've seen with the stock market, it's looking past the Iran conflict. We see the stock
Yeah.
market at all-time highs. So I think that is a forecasting machine to the future. And I think it's
Mhm.
saying, this conflict may be either less shorter than maybe we were anticipating a couple weeks ago. Maybe it's closer to the conclusion than now than before. And I think that's improving risk sentiment and investor sentiment across the board,
Right.
including with crypto. So I think risk sentiment has improved from that end. Another element that has been worrying investors over the last couple of weeks for crypto has been the quantum threat. We saw Google's
Yep.
progress on quantum a couple of weeks ago, and that sparked fears across the crypto space. But as you were just noting, many of the blockchains, including XRP and Ethereum, are making strong progress on their technical roadmap and proposals towards quantum resistance. So I think the market and investors are starting to become more comfortable with that and maybe starting to look past that as well. And then, there TBD, but there is, there's Brad Garlinghouse and some other people have said that they have a strong confidence in the Clarity Act passing in
Going through.
by
Yeah.
end of April. So if that does pass, that's going to be a huge overhang lifted from the market. So I think some investors are maybe getting excited about that as well.
So you think this is a little bit of a run up? I just wonder when, and Matt's been on our show a couple of times, and we've talked about the kind of the building blocks of where ETF and digital assets are moving. And this was, if you look back to the Bitcoin launch, then eventually the Ethereum launch, then eventually the XRP ETF launches, all of those have been very successful early on. Some of them have, moderated somewhat. XRP still flying in terms of total assets moving into the space. I think the institutional inflows were like a billion and a half, 1.5 billion on cumulative inflows into XRP ETFs as of early this year. My question to you is this: do you think investors now are looking more toward ETFs for exposure, or is this maybe just a hedge where they want to get direct exposure to a token and then they want to go over and get an ETF exposure to a token to kind of hedge the two sides?
That's a great question. I think there's no doubt that ETFs are growing among both retail and institutional investors, particularly
Right.
among institutional. I mean, for
Mhm.
XRP ETF, for example, which has had a great run of inflows, as you were talking about, very strong
Yep.
showing since the November launches of the ETFs. We saw the institutional filings from Q4, where Goldman Sachs reported 150 million held in XRP ETFs.
Yeah.
So institutions are coming on board. And we've seen that since the start of the Bitcoin ETFs, Bitcoin and Ethereum, and then Solana, now XRP. Institutional ownership of these ETFs is growing. And that makes a lot of sense in the context of institutional money managers, wealth advisors, money managers with fiduciary duty that need a regulated wrapper for the investments that they hold. So the ETFs obviously make that very easy, and it just fits into their workflows. It's easy to manage. You don't have to deal with the keys and all of these other things. So I
Sure.
think among both institutions and retail, we see it growing in both. Not that there won't be people who want to hold the crypto assets themselves, custody it themselves in cold wallets, but I think definitely the ease of use into your traditional finance workflows and how that embeds into the financial ecosystem makes the ETFs very attractive.
Do you think that investors, whether it's institutional, high net worth individuals, are making their decision? I mean, if you think about XRP, the real world utility, cross border payments, the XRP ledger against Bitcoin's kind of digital gold scenario, and then even Ethereum's DeFi narratives, do you think that investors today are picking utility as a strong suit for, if I'm going to get exposed to digital assets, I want something that has utility base elements around it? Is that one of the factors, or what else?
I think that's definitely one of the factors. Investors we talk to are one looking at the space where, a couple of years back it was very thought of as a very monolithic space with Bitcoin and that's it. Now
Yeah.
investors have gotten it. Many have gotten exposure to Bitcoin, understand Bitcoin better, and are moving into the
Mm.
rest of the ecosystem. So they're moving into Ethereum, into Solana, into XRP, and starting to learn and differentiate the use cases and the features of each of these different blockchains and what makes them attractive so they can
Right.
build a multifaceted, diversified portfolio of digital assets.
Interesting. So the decision of utility, because this is something I hear more and more, especially in our wealth seminars we do, is the question is always, what else can this stuff be used for
Mhm.
when you talk about tokens? Once they educate themselves on, if you think of Bitcoin just like a gold, it's most cases if you think physical gold, it has a lot of straight elements to Bitcoin. Doesn't do a lot. The advantage of Bitcoin, you can move it around. But XRP, you get into, all right, there's a lot of utility case. Most likely, we're going to have banks utilizing this for clearance. We're going to see a lot more integration into the traditional financial system. That starts to perk people's ears up very quickly because they're thinking, wait a minute, this is like the fuel. When you look at why you guys launched an XRP ETF and you look at the potential around the idea of investors coming into digital assets for the very first time. How do they how do they divide up their exposure? Is it an all in, or do they take out 1 to 5% and they spread it about? What's the strategies you guys have seen in use case?
Yeah. A For many investors, we're seeing a diversified exposure uh, that on the more conservative end is about 1% of their overall portfolio. For those that are more knowledgeable or comfortable with digital assets, we tend to see a 3 to 5% allocation, sometimes more,
Okay.
but generally 3 to 5%. And that 3 to 5% tends to be diversified among the major tokens, generally by market cap, unless they have a specific conviction for any particular asset. And so they make that a bigger exposure. But generally, what we see is Bitcoin, Ethereum, Solana, XRP, maybe something like Avalanche, maybe something else in there. Sui, some of these other ones, but they tend to focus on the major tokens. Chainlink is also becoming popular with investors at a market cap weight. And to your question of our decision to launch an XRP ETF at Bitwise, um, XRP has come out of a long-standing lawsuit that finally got cleared in 2025, and then as you remember earlier this year, about a month ago, the SEC and CFTC jointly came out with a regulatory determination classifying 16 tokens, including XRP, as commodities. So that really clears the regulatory hurdles that XRP had in front of it. And we've also seen
Right.
we also saw leading up to this over the last year a really big and important transformation, almost I would say, for Ripple and underlying XRP, transforming itself from a payment company into a full stack financial infrastructure through a series of important acquisitions. Last
Right.
year, we saw the acquisition of Hidden Road to bring in into the fold a prime brokerage that clears institutional clients. They also made the acquisition of Rail, which is the stablecoins platform processing B2B stablecoin flows. And then we saw the acquisition of G Treasury for treasury management of large corporations.
Right.
And then we saw in March of this year that the DTCC announced that Hidden Road is now live on their National Securities Clearing Corporation, which I think is a major milestone integrating XRP into the financial system. So now that operates as Ripple Prime. So I think those are big advancements in terms of acquisitions that broaden the scope and the opportunity for XRP. And so all of those things made us excited to bring the ETF out to market for investors.
Okay, so you have a shift in sentiment right now. We just showed, the market sentiment is flying. The S&P has been making all-time highs. We've seen Bitcoin nearing 80K again. ETH is up, I think 5% just in the last few days. XRP on the move this last week. So sentiment is clearly here. My question is, once these narratives, especially clarity, gets through, do you think that we will see a strategy from both institutional and high net worth where they will escalate that 1 to 5% deployment into digital assets up to maybe 10% of their holdings? Do you think that's a possibility in the next few years?
I think so. You look at the macro context, and we see increasing levels of debt, interest rate on the debt taking up more and more of the federal budget. So
Yeah.
all of that points to more devaluation of the dollar. So I think investors are
Right.
looking for hard assets that protect against that. So they're looking at Bitcoin, but they're also looking at growth assets that will grow the value of their
Yeah.
portfolio. And I think that's definitely where assets like Ethereum, Solana, XRP come into the fold, given what they have ahead of them, especially in the context of the Genius Act passing into law last year. That is really catalyzing the mainstream growth of
Sure.
stablecoins for RLUSD. the stablecoin of XRP, we've seen massive growth over the past year. I think it's grown its market cap by 10x almost. It's at a 1.5 or 1.9 billion. And just last year, a year ago, it was at around 100, 200 million. So you're seeing that growth. And with the advent of stablecoins becoming the new payment rails, with tokenization growing into in the next couple of years,
Yeah.
I think that growth picture is really attracting investors to grow their digital asset exposure, grow it within their portfolio. I think just recently, Morgan Stanley now recommended an allocation of 7%. So that what used to be 1%, that has now moved to 3.5, 3 to 5%. Now some institutions are recommending beyond that. So I think it's very, very possible that over the next couple of years, anywhere from 1 to 10% of a person's portfolio is it becomes a mainstay allocation of digital assets.
Yeah, and you guys think about that. I mean, we're talking multi-trillions out there in terms of cash on the sidelines. You look at the rotation out post Iran and also post clarity. You look at the opportunity for the AI, whether it's going to be a bubble or not. The idea is that we're going to continue to see advancements on this. One last question before I jump into another topic. With XRP, do you feel that in terms of a crypto bet, are investors looking at it as more of a fintech infrastructure play versus, what you might see in, other ETFs? Is that how they look at XRP's ETF?
I think they are looking at XRP as a multifaceted financial growth, like fintech growth opportunity. I think they are looking
Yeah.
at the
Okay.
looking at it as a settlement network for cross-border payments, the possibility of remittances and stable coins folding into that. So I think all of that comes into play, and increasingly also with the treasury management acquisition, the prime brokerage as a financial powerhouse that can serve institutions for all sorts of financial applications.
Listen, we've seen Bitcoin ETFs. They've been somewhat volatile in terms of flows. XRP ETFs have shown somewhat of a consistent trend. It's very sticky inflows. What does this tell us about the difference between the Bitcoin investor and the XRP investor?
I think it says a couple things. I think one thing that is similar among the two is what you saw at the beginning for both Bitcoin and what we're seeing now for XRP ETFs is the pent up demand for an
Right.
institutional ETF. For the Bitcoin ETF, we ran a survey every year, and before the launch of the ETFs, it showed us that a large percentage of advisors were wanting the ETF to get exposure because, again, from a fiduciary point of view, they couldn't get exposure to Bitcoin itself. And I think similarly with XRP ETF, with all these years of uh, of it being mired in the lawsuit, there's so many
Mhm.
institutional investors that didn't want to touch it. But now that that cleared and the ETF launched, they have a vehicle they can access, and so I think this continuous string of inflows is that pent up demand coming into the market.
I want to take a minute, guys, and just invite you to join the Barron Market Edge private member group. You guys can do that by just clicking the link down in our description. This is your insider's edge to the AI and crypto money revolution, which is what we really focus on here on PBN. This is additional research that I do along with our team. And we have a pretty significant team on our research around not only what guides our episodes, but a lot of that research gets built into more content that I drop here on the Barron Market Edge. We do market trends and sentiment analysis, which can be anything from tokens to all sorts of strategies. This, of course, will also guide you over to our Telegram group, and we give this as elite community access. You get bonus content over there, including tax guides, as well as different kinds of asset guides out there that we drop all the time. This is your 10-year vision in action. All you have to do, of course, is just hit that little subscribe button or join the community and get in on it. It's absolutely free. It doesn't cost you a thing. So check it out. Okay, so pent up demand. Do you think, especially if you think about the spot ETFs, since it's been launched and by various institutions there within your market. We've seen XRP's price kind of become a little bit more stable. Do you think the wild west of XRP volatility is over, or do you feel like, hey, this is just the beginning of what we're going to see in this category? It's still under 3 trillion,
Yeah.
in terms of the whole category.
Yeah, no, there's still definitely a lot of growth ahead for the digital asset ecosystem. For XRP itself, I think a lot of the volatility, again, was driven by the uncertainty of the regulatory and legal status.
Right.
Now that that's cleared, I think that's part of what's dampened the volatility. And I think from here on out is a lot of the growth is can be driven by the progress and traction in furthering its penetration of its use cases. So
Yeah.
we're seeing a lot of partnerships to make it global. Recently saw the partnership with SBI in Japan. They're also opening up Barron USD in Singapore. And they're
Yeah.
looking at Africa. Every quarter of the world, of course, they're looking to expand into with banks and payment providers. And as I mentioned, the market cap of the stablecoin has been growing. So I think as we see the market cap grow, the volume of transactions grow, as we see more partnerships and more of those revenues start flowing from the
Mhm.
partnerships, I think all of that should drive the price if we continue to see traction.
So you've got okay. So you mentioned RLUSD. When you look at the launch of the stablecoin and the integration into the ledger, in terms of the influence that you see on maybe the long term value proposition, do investors look at that and say, "Hey, this has a stable coin. This has a very effective ledger, XRP ledger framework for developers to really start to get involved in this platform." Is that another area that gives them maybe the reason we've seen such sticky inflows on ETFs? Is that do you think that matters?
I think there's a lot of conviction from investors around it. I mean, XRP ledgers is a very efficient settlement ledger. I think it's sub five
Yep.
second settlement. The comparisons I've seen versus Swift, for example, is that um, transactions are over 60% cheaper on the XRP ledger. Um, and then it's regulated, right? RLUSD and the XRP ledger are regulated. You know, the dollars are held in short-term treasuries, reserves held by custodians like BNY Mellon. There's independent attestations. It's growing in different markets of the world. It's viable. It runs on Ethereum and expanding into Ethereum layer two networks like Optimism and Base. So it's really expanding across the ecosystem and across the world. And because of the efficiency of the ledger, I think it really is an attractive point for investors, which they look to.
So there are, if I calculated this correctly, it's about 160 billion right now in terms of digital assets for assets under management. Bitcoin, I think, setting at around 120 bill, Ethereum about 18 right now, XRP hovering around 2.5 billion. What do you think this AUM looks like in 12 months for ETFs?
I think depends on if we see the Clarity Act pass. I think that lifts a huge cloud on the market. If we see this Iran situation resolve itself, I think all of that can lead from very depressed market right now in digital assets to huge growth. Prior to all of this, we saw highs of 125,000 in Bitcoin, and we're sitting at under 80,000. So
Right.
um,
Yeah.
I think for Bitcoin and those other assets, if we resume the bull run, I think we could go to new all time highs over the next 12 to 18 months if all of these catalysts align.
You look at Warsh, Kevin Warsh, he's coming in. We'll move on to the Fed for a minute. I'll share a quick screen here from the Wall Street Journal. Warsh had a statement on there. He says he suggested he would have few qualms about opening the U.S. banking system's doors to further cryptocurrency, but at the same time, he believes it's got a place in finance. So he's maybe kind of, I wouldn't say all in, but he's definitely very pro in consideration, maybe a little bit more than Jerome Powell. How much of an impact do you think Warsh is going to have, one, on the Fed when it comes to crypto in general? Is it going to be positive, negative? What do you think in the early, at least in the next year?
I think independent of his personal views, which
Yeah.
I don't necessarily know because I don't know him personally, but in terms of what he can do at the Fed, I think he signaled he believes new technologies such as AI and crypto are deflationary, and so
Mhm.
that they're enhancements to productivity, which is deflationary, and so that should require a lower level of interest rates. So I think once the Fed gets comfortable with seeing how the current oil price shocks affect longer term inflation, I think
Yeah.
over the medium term he's going to push for lower interest rates at the Fed, and that will be conducive to the digital asset ecosystem.
So when you say medium term, would that be 2026, or I mean, because we're sitting here in end of April, so really, we've got 8 months left here.
Yeah,
Is that 2026, or do you think it's next year?
I think depends on the Iran conflict, right?
Okay.
It's not over; it's still ongoing. Oil prices are still high. I think we have to see how that resolves itself. If it resolves itself sooner, I think interest rate cuts could be on the table towards the latter half of this
Okay.
year. But if the war continues on and that pushes inflation higher, then they'll probably push to next year if the rate cuts.
Yeah. Well, listen, I mean, if you get that, it definitely puts people into the risk asset mindset, which if you look at the data, this was the Fed survey, and now it's 8% of households reporting the use of crypto. And this was 24. I think that's up to over 10% now, but it's down from the 12% in 2021, which I would say that even in 2020, now granted, 2021 was a year where we had more all-time highs in that market. Do you think this has just been suppressed a little bit because of the macro environment that we're faced in right now?
Absolutely. Yeah, absolutely. I think the
Mhm.
risk off sentiment has been severe for all risk assets, including crypto.
Yeah.
And I think, adoption also takes time. Just yesterday, I believe DoorDash said they're going to start accepting
Yep.
stablecoins as payments. we
Right.
we know that the big banks, Bank of America, J.P. Morgan, Citi, I think even Wells Fargo, they're working on their own stable coins.
Mhm.
So all of this is coming, but of course, it takes time to embed into the financial infrastructure, which then takes time for consumers to start using. Um, so I think it's a slow moving train, but we definitely know the direction it's going. And so I think that percentage of Americans holding cryptocurrencies, using stablecoins for payments, all of that is going to be higher in the next couple of years.
What do you make of there's two big, drama points right now in crypto. For those who are kind of in the know, for many of you that are watching and maybe just getting into this for the first time, you've got the drama point of the recent hack in DeFi, and then you have the drama issues around World Liberty Fi. And I think for the savvy investor, because I'm talking to more and more investors that are picking up on crypto, and these two stories were the ones that I was called more in terms of people who are in our circle, I was called about more than anything else that I have been called about recently.
Mhm.
So, do you think that this is a concern? If you look at the World Liberty Fi, people are just saying, "Hey, it's administration doing things that other administrations have done in the past, and this is just the new way." And the DeFi hack itself, which one do you think is worse right now for crypto?
Neither of them are good. That's for sure.
Yeah.
I think the DeFi hack, because we can see into what happened, because it is a somewhat of a recurring problem. I think that
Yeah.
might be worse because it's something that needs to be either addressed or I think the way it gets addressed is once the Clarity Act passes, there will be more regulatory, not enforcement, but more regulatory guardrails. And
Yeah.
so I think for DeFi protocols to really grow and for the DeFi ecosystem to really flourish, I think it will
Yeah.
will have to become more institutionalized, which means more oversight, more guardrails for how you engage with these protocols,
Yeah.
and
Stopgaps.
more
Do you
stopgaps.
do you
Yeah,
yeah,
and
do you okay, so that this is a conversation we have often in our own research teams. And I think a lot of people look at crypto and they think, okay, crypto, it's decentralized, people can't come in and claw back and all that. Arbitrum announced yesterday they were going to be able to essentially freeze a lot of the fund. In fact, they did freeze a lot of these funds. I think it was around 70 million of what was happened by the North Koreans. Um, that's a DeFi platform. So now you have that happening and these stop gaps. Now, granted, many people would argue, well, because of the nefarious actors that we are seeing, you have to build these into into these systems. And that when you're trying to move, 20 million, 50 million, 100 million, maybe it's okay for you to wait 10, 20 minutes to be able to get those signatures completely done correctly. Do you believe that circumvents the idea of a truly decentralized crypto?
I think in some ways it does. I think one, I think we need better governance in the ecosystem,
Yeah.
and I think that
Yeah.
will come with regulatory clarity, and with better governance, then you can have assets move more freely without the need for these interventions. So I think
Yeah.
we'll get to a better place than we are now over time. But then, in terms of the ethos of the ecosystem being decentralized, no one can control your assets. I think that's why we go back to the Bitcoins, the XRPs of the world, where if you truly want that, then
Yeah.
transact on the ledger itself, and be responsible for your assets. If you start getting into uh, protocols, into DeFi protocols that then have a layer of intermediation, then you can get yourself in those situations where you may be subject,
Yeah.
because of regulation or otherwise, to someone having some control. So I think the fundamental ethos is can still be actuated if you are a savvy, and learn how to use the blockchain tools and the cryptocurrency system yourself. But there's levels to it, right?
Yeah. Do you think Circle would rethink their position had they had to redo that drift protocol hack again? In other words, freezing funds where they had access to it.
Probably.
Yeah.
Probably is yeah, it's always hard to foresee the risks ahead of time, and there's these smart contract platforms. They're each smart contract is unique. They're all set up
Yep.
slightly differently. They interact in different ways with each other. So
Mhm.
it's hard to see what all of the downstream effects are when you set up an integration for these bridges and the liquidity that gets provided. Um, but again, that I think this requires a maturing of the ecosystem so that these things are handled more properly.
Well, hopefully we'll get that now. I mean, and even with the race for quantum assurance is probably going to move governance up quite a bit just because of that, that new risk vector that's being put out there. One last couple of questions to you. You think about the growth that we've seen, even though it's very nascent. I mean, if you really look at the size of ETFs in general for digital assets, do you think there's ever a possibility where institutions would go to self custody versus going through an ETF and holding that way versus just self custodying these assets? What are your thoughts there?
I think regulatory wise, given how our financial system works, I think it's going to be hard for any large asset manager to self custody. I think there's very clear delineation between the custody and the wealth asset management, and I think
Yeah.
those have a reason to be separate. So I think those should probably continue to be separate for investor protections and risk management. Is my
Mhm.
inkling.
Well, and I think the point you get at is when you've got custody services involved, it obviously creates even more security barriers, which is really at the end of the day is one of the things that I think all institutional capital deployers are looking for is the more and more security that we can get going. All right, so last just quick kind of lightning round here. If you look at the current market as it is right now, do you think the market goes up post clarity, or do you think that that is kind of one of those fake pumps that we'll see?
I think if clarity passes, I think we do see a sustained rally. I mean, short term, who knows how the market moves, but I think if it passes by the end of the year, we are higher.
Yeah. What do you make of, I mean, Bitcoin holding at, I mean, it's busting out again. We're holding at, where are we? Let's see. Let's take a look real quick. Holding at 70. Yeah, just cracked 79 as we're
Mm.
recording this. So you've got it on the move. You've got the S&P holding at around 71. It had a little choppiness, but it's back on a green day today. And I've listened to Tom Lee. I'm listening to all the traditional money managers on Wall Street telling me that we're not done yet, but be ready for a potential pullback. What do you think is a catalyst that could cause that? Because I'm just thinking, well, if clarity goes through, I don't see a pullback. If the Iran shooting stops, I don't see a pull. What would be a catalyst that could cause a market correction if those two things are actually completed?
I think those two catalysts are beneficial for crypto. But then there's the element of crypto that also depends on liquidity more broadly outside of the system.
Right.
And
Mhm.
I think if the economic data um, in the US continues to deteriorate, we saw the big pullback in GDP in
Yep.
Q1 versus the prior quarters. We've
Yep.
seen basically stagnant job growth over the past year. And then we've seen the consumers start pulling back a bit, taking out higher credit. So I think if we see a meaningful pullback in consumer spending, we already see consumer sentiment deteriorating, then that could, I think, cause the correction in the stock market, and that could pull liquidity away from the system that could ultimately affect
Okay.
crypto as well. So I think it's if those catalysts you were talking about come to pass, which would obviously be positive, I think it's a broader liquidity pullback that could affect the crypto ecosystem.
Yeah, I'm looking at the XRP growth right there. You can see holding pretty strong
Mhm.
in a short period of time too on this recovery. And then Bitcoin, of course, has just been absolutely the star, really, over the last few weeks. If you go to this bottom here, which is now trading considerable right there, I don't know. I'm still wondering if this is, is this a true bull run right now that we're witnessing versus because you get Tom Lee in here, he says 7,300 on the S&P, Bitcoin now starting to bump 80K. It's possible we might hit it this week. What does that do for consumer sentiment? Because consumer sentiment has been very, very low.
Yeah, yeah. I think as you were noting earlier, crypto sentiment has been improving. We were at lows of 10
Yeah.
when in the fear and greed gauge earlier this year. We're now up in the 50s, 60s. So
Right.
I think the expectations of investors for crypto are improving at the same time that consumer expectations in the general economy are deteriorating. So I think that's where the mismatch lies. And we'll see if the improving sentiment in crypto can just carry it higher beyond anything that happens outside of the ecosystem.
Yeah, well, that's going to be a big one too. I think is that as we see consumer sentiment, along with just the adoption, because the thing about consumers that I think we'll find we're seeing it in our wealth courses that they're much more. A year ago, they were much less interested in crypto. These are mostly business owners. The elevation of interest in crypto right now has been absolutely I haven't seen it like this before, and I feel like we're still in a bear market. So, very impressive on this. I just saw that SoFi added XRP deposits alongside Bitcoin, Ethereum, and Solana. So now you've got a nationally chartered US bank offering XRP trading. And that's crazy from FDIC insured accounts. So if you're sitting in SoFi, do you think we'll see more of that, banks doing that?
Yeah, I think so. I think
Yeah.
all major banks and brokerages and payment platforms are opening up to crypto and figuring out how to embed it. They see that that's a huge part of growth in the financial ecosystem over the next coming years. They're after piloting for many years, they finally understand how the technology works. They understand the benefits of the faster settlement, the global liquidity, the lower cost efficiency, and I think they're all embedding crypto for those reasons.
Yeah, and the latest data was 1.4 billion in inflows last week, which I didn't know that was we had not seen that high since January, I think it was. So that's pretty significant in terms of confidence in the market, which is to me is just mind blowing. What do you, okay, so I have so many questions I want to ask you, but as Bitwise, you guys get a chance to see what's happening here in the US, but you look outside the US, Russia passed their crypto bill in its first, run at their parliament, I guess is what they do. Or their what is this? I can't remember if they're at a parliament or how they do it. But point being is that now you've got Bank of Russia, which is going to oversee licensing and regulatory enforcement in this. So you got one of the top three, global powers. Does this mean we are going to see a lot more countries starting to implement this beyond El Salvador and the kind of the usual suspects?
Yeah, I think over the coming years, we've seen already in these last year or two, many of these central banks or the treasuries of these governments start exploring Bitcoin and crypto at large. And we've started to see slow but growing adoption. Russia is the latest one. I think earlier this year, both Pakistan and Poland made inroads in passing proposals to either remove a ban on crypto or be able to add crypto to their treasuries. Um, and so I think we'll continue to see this. I
Yeah.
think it govern just like individuals and companies and corporations and governments are also realizing the benefits of this new financial infrastructure.
Yeah, well, and I think it's just a matter of time before we really says this is really going to be the future for all assets. And you look at I don't know if you follow Michael Arrington, but he's been a very big proponent of Ripple for quite some time, and I think his statement is that he believes that they're close to creating the next almost incubator around new startups and driving a lot of new fintech companies. Do you think that the old guard will compete against the likes of this new guard that's coming in? I mean, I would consider you guys a fintech and a new guard of investment. So, what do you think?
Yeah. Yeah, at Bitwise, we're very excited about the growth of the ecosystem. We see these new types of investors, investment funds pushing the ecosystem forward, making investments in startups that are developing new technologies, new services. And I think that's definitely going to collide and compete with the traditional fintech ecosystem.
Yeah.
See many, over the last couple of years, we've seen this race for who's going to be the new dominant neobank. And
Hmm.
neobank used to be considered, the possibility for companies, upstarts, new companies like Nubank, like Revolut. But now in the crypto ecosystem, there's areas that are where we're seeing that as well. And even Coinbase today is, what started as a wallet and brokerage is now grown into this multifaceted financial powerhouse
Yeah.
that has the possibility of doing that. You've seen Kraken just got approval for having a limited account at the Fed, so they can bypass a banking system to interact directly with the Fed. So I think these crypto companies are becoming very interesting, and we're seeing them grow into multiple revenue lines and multiple ways of growing.
Yeah. Do you think that the United States, well, yeah, I'll call it the US because it's really more the regulatory arm of the United States. Do you think we have messed up our opportunity? Because I look at what Ripple is doing in terms of advancing RLUSD through the Monetary Authority of Singapore. That's now going into a regulatory sandbox, like right now.
Yep.
So, do you think is the US too late? I mean, I look at it because listen, I came from Silicon Valley. We didn't have any competition overseas. I worked with Microsoft. They sent me across. I worked in Asia for 8 months out of the year. They were so far behind. They would never catch up in terms of the early stage of tech and where the internet was going. But now, when it comes to blockchain, I feel like the Pacific Rim is a little bit ahead of us right now. What are your thoughts there?
I think there's definitely more global competition. I think Asia, to your point, has been ahead of the game in crypto adoption. But I think the US is doing a reasonable job that has to keep on going to catch up. I think it's
Mhm.
natural for the largest financial system in the world to have to move slower and be more conservative. There was also, a straight up administration that was trying to stop it. But
Yeah.
now we've seen the Genius Act be passed into law. Let's get the Clarity Act there and let's keep pushing the innovation forward. I like what the SEC and CFTC are doing with Project Crypto. I think all of that
Right.
is pushing America forward in its crypto ambitions. And I think, fortunately for the US, it still has the largest financial system, and B, the most entrepreneurial ecosystem, in Silicon Valley and beyond. But, outside of crypto, we're seeing the largest AI companies come from the US, not elsewhere.
Yeah.
And in the US, largest public brokerage how we were talking about Coinbase and moving into other financial lives. That's here in the US. It's not outside of the US. So I think that the
Yeah.
US still has a stronghold for capital formation and innovation. And as long as we keep on pushing for the right regulations to embrace that for crypto, I think the US will have a strong place.
Okay. All right. Last question. I promise I'll let you go. You look at the hack that we just saw here in DeFi drain nearly 300 million from some of these smaller crypto projects, but it triggered a $10 billion run on the largest DeFi lending platform out there on Aave. Do you think that will slow down Wall Street's growing interest in tech, blockchain tech?
I don't think so. I think Wall Street has been piloting the technology. We've seen many pilots from the banks and others over the last couple of years. So I think they understand how the infrastructure works and the technology works.
Yeah.
And I think they're just going to be, I think, if anything, a hack like this is just going to continue pushing them down the path of being very selective with who they partner and build with and which
That's what
blockchains
I
they
think.
use.
Yeah.
So I think it's just that. I don't think it'll slow them down though.
If anything, it gives, I think, the really smart money managers even more faith that they understand where the risks are. So once you know where the risks are, it's easy. I would say it's easier to avoid them. So, and then you start asking the right questions to a lot of these DeFi platforms, and you figure out, is the tech, solid all the way through, which is where Kelp DAO had the problem was, they just went off of a spec sheet in terms of setting up their architecture. So that I think is going to be a good thing for sure. Listen, it has been great having you on the show, Juan. Thank you so much for coming in today. We do appreciate it.
Paul, thank you for having me. Great speaking with you.
All right, you guys know what to do. Make sure and spread this around for many of you that are just brand new to crypto. There's a lot of people out there that are just getting into it. So welcome aboard. Make sure and like and subscribe, and we will catch you later on the XRP podcast. Take care.